Morning, welcome to the National Real Estate Post. I'm your host, Frank Ray, and today is a very interesting show. Check it out. Before we get started, though, got to do my housekeeping. Remind you of new Loan Officer U. Loan originators and branch managers and companies, if you're looking to grow your branches, you should hire new people, and training them is the big pain in the butt. That's what new Loan Officer U takes care of for you. All the training is done online. Check it out. Now they're running a special. 10% of everything collected for a certain amount of time here is going to go to hurricane relief for Texas and Florida, so your money is going to be going to a good place. And also, just so you know, companies and branch managers, if you buy a couple of accounts for new trainees in advance, that'll basically just sit there and wait for the new trainee to come in and then activate it, so you can pay for it now and then activate it later, so no worries there. There's a new Loan Officer U banner over on your right. You may have to scroll down a little bit. You'll see it. It looks like this here on your screen. Go do that. Build your branches by hiring new people. Hey, every superstar was green at one time. There's a link up above here on Facebook. Let's get on with the show. Very, very interesting show today. This is fascinating. Check it out. Listen, of course, you remember when Wells Fargo got fined for creating 2 million fake accounts for customers, and the CFPB went in there and fined them $100 million. All right, so here's an interesting twist to this story. Now, according to a Housing Wire story, by the way, I love Housing Wire, you should check them out, there was a staff report that was sent to CFPB Director Cordroy when the matter came to light with Wells Fargo, saying that even if they just imposed what they called a first tier or tier 1 fine on the bank, the fine should be somewhere around, listen to me, $10 billion, with a B, billion. But they recommended to the director to just fine the bank $100 million, as it would put the matter to bed and it would still be enough money to deter any such activity in the future. Okay, 100 mil versus 10 bill. Well, as you know, Jeb Hensarling of the House Financial Service Committee, he's got it out for the CFPB, and with good reason, because they are completely unaccountable and make up the rules as they go along, fining every lending institution in the country. Anyway, he's leading an investigation into the Wells Fargo case and has discovered that the CFPB withheld this little staff report from the House Financial Services Committee even after being subpoenaed to provide everything regarding the matter. Let's think about this. This doesn't sound very CFPB-like, does it? I mean, with respect to the fines, okay? I would think that if Cordroy saw $10 billion on the table, he would have sat out the fine china, dressed up nice, and went to Crushy Town on Wells Fargo. I mean, when have we ever seen any compassion from the CFPB when it comes to doling out fines on banks and lenders? Usually they come in, make up a new rule on the spot, and then crush the company in question with a brutal fine. Why not this time? Especially with their favorite bank, Wells Fargo. Why the favoritism to Wells Fargo on this matter? Oh, and by the way, after they settled for $100 million, Wells Fargo came back later and said, oh yeah, actually it looks like it was closer to 3.5 million customers, not 2 million. But that's already been settled now, right? Hey, if it was 3.5 million, what type of a fine would that have been, even with their first tier or level 1 fine situation? Well over $10 billion. So the question is, what the heck is going on here? I gotta tell you, to me, personally, my opinion, it looks like there may be something deeper going on here. It sounds a lot like there's something deeper going on here. It feels like there's something deeper going on here, and I bet if I were to taste it, it'd taste like there's something deeper going on here. And that something, it ain't something good. By withholding this report from the House Financial Services Committee, I mean, I'd like to sit here and say to you, ha ha ha, the CFPB's in hot water now. But they're not, because they don't answer to anybody. I mean, I'd love to say that this is going to deal some kind of a crushing blow to the overzealous agency, but it's not. It's pretty much hopeless, man. It's a hopeless situation, just like every other egregious government scandal. The only ones that are going to suffer here are the lenders that are trying to play by the ambiguous rules set forth by the agency and the consumer. So, pretty much business as usual for Americans, right? Well, you know, at least we do have some in Congress who are trying to untie the dirty knot we know as Dodd-Frank. Some who believe every government agency has to be accountable to the people, you and me. You know, let's hope they can break through this thick BS barriers that lay in front of them, man. You know, the Housing Wire story quoted Representative Ann Wagner from Missouri. And I'm going to end the show with that quote because she's right. Here's what she said. Today's report confirms what everyone already knew. The CFPB lacks accountability and oversight. While everyday Americans suffered at the hands of Wells Fargo, Director Cordroy evaded the truth before Congress, and the CFPB settled for pennies on the dollar after being caught asleep at the wheel. Additionally, the second interim majority staff report confirms that the CFPB is willfully obstructing this committee from conducting our oversight responsibilities. And that's the truth, isn't it? I'd like to know what you guys think about all this in the comments down below. And do me a favor, forward share this video with everybody, because this is just a bunch of BS and I think everybody's sick of it. I know I am. Do me a favor, if you meet me for the first time, subscribe for free. If you're watching us on Facebook, there's a link up above, and if you're on our website, there's a big orange button in your upper right-hand corner. You guys have a great day. We'll catch you later here at the National Real Estate Post.